So welcome to Mex Moves, our weekly podcast on Mexico business and finance. How are you, Eduardo?
Doing well, Damian. Thank you.
Good. Well, this week we have two great interviews. One with Andries Smit. Andries is the Chief Growth Officer at inDrive, the third ride-hailing app and mobility app in Mexico after Uber and Didi. And we also have an interview with Marimar Torreblanca on ESG in Mexico and how it's being applied. And then, Eduardo, I think we could talk about the Moody's downgrade of Mexico. It's grabbed a lot of attention here. The apparent cancellation of the Royal Caribbean's investment in a water park in Mexico. GM moving some car models to Mexico from China. Good news for nearshoring for Mexico, for USMCA. And then we'll discuss a few other slightly less important issues at the end.
Sounds good. Shall we begin with Moody's?
Yeah, so I think everyone would have seen, most people who listen to this podcast at least would have seen that Moody's downgraded Mexico from Baa2 to Baa3 on Wednesday, May the 21st, just before Mexican lunchtime. And the outlook was revised from negative to stable. So for Moody's, Mexico is just one rung above investment grade. If they cut again, Mexico would be junk, according to Moody's. Mexico is two above investment grade with S&P, but they put last week, as we talked about, they put a negative outlook. So that's probably gonna change at some point. I think while it was pretty widely expected, Moody's had Mexico on a negative review and said that they were going to sort of take a decision before the end of the first half of 2026. They moved slightly earlier than some people expected. Some people expected the end of June. And I think the deterioration of the sort of fiscal accounts and the growth outlook made them move ahead of what was originally planned. Now, the markets barely reacted to it. The peso basically stayed at 17.30 to the dollar. Government bond curve didn't really change, and there was no meaningful kind of sell-off in sovereign debt. So definitely didn't shock the market. And if you look at how Mexican sovereign debt is trading, it's already trading. It was already trading at these levels. In fact, even at junk levels. So the market is sort of, as usual, as often is the case at least, is sort of slightly ahead of the rating agency. I think the crux of the Moody's argument, not very different to S&P. Moody's always been a little bit more cautious or skeptical about Mexico than S&P, was that at the federal level, Mexico had a nice fiscal adjustment last year. But unfortunately, almost all of that was offset by the additional contributions to Pemex. So from a consolidated public sector perspective, including Pemex, there really wasn't a meaningful fiscal adjustment in Mexico. They saved money at the federal level and gave it to Pemex to help its finance. So Moody's estimates that between one thing and another, the Mexican government gave $35 billion to Pemex last year, which is almost 2% of GDP, and another $14 billion is expected for 2026, which is 0.7%. And in addition to that, they point to the low growth. The low growth means that even if debt is relatively stable as a percentage of GDP, it's going up because GDP is barely moving. And then, the lack of any significant sort of fiscal reform or fiscal consolidation going on. Now, they put the review is stable, not negative. So that suggests that they're not in a hurry to downgrade Mexico to junk. And they point to, the credibility of the central bank, which has taken maybe a little bit of a hit recently. But broadly speaking, I think it's still, well regarded. There are no big macroeconomic imbalances. Mexico has a tiny current account deficit at this point. It's got lots of reserves. And because of the growth of the Afores, it's actually very easy for Mexico to finance these deficits of sort of 5% of GDP because there's a lot of liquidity in the local debt market. And you're actually seeing Pemex switch its financing to the local market. So that's all all points to no imminent move to junk from Moody's. Of course, things can change, but all of that said, debt to GDP is creeping up. There isn't really right now a strategy, as far as I can tell, to solve Pemex's operational problems, and that suggests at least that the government's going to have to keep putting money into it. And then this latest increase in subsidy gasoline price, because of the increase in oil prices thanks to the conflict in Iran, is also going to probably lead to a deterioration in fiscal accounts versus what was originally planned. What did you make of it, Eduardo?
No, I think you've covered the story very well, Damian. I think the main two factors is the Pemex burden on the Mexico's fiscal finances and the lack of growth. They were quite pessimistic about that element. In fact, they said that they didn't see Mexico reaching a 2% growth rate in the near future. And the other element that I would highlight might be the renegotiation of the free trade agreements. I mean, we're all counting on that to happen one way or another. But Moody's did highlight that that's a crucial element of the Mexican economy. And so they're hoping that things will turn out the way they should, that it will not be a disruption of that treaty in broad sense, but it's something that hasn't been resolved and will not be resolved this year. As we have mentioned it before, we're getting very close now to the deadline. So that will be an ongoing uncertainty on the Mexican economy, despite the fact that we're going to talk later about some good news in terms of nearshoring. But that's an element that I think is keeping the rating agencies worried that Mexico has not been able, or that the U.S. has not been willing to reestablish a solid free trade agreement for the Mexican economy, which is much more important for it than for the U.S. So it was expected. The markets didn't react. Hacienda tried to put a smiley face on the thing, saying that they're still investment grade, which is also natural from the one that gets punched. Stands up and says, no, but I'm still here. I wish they were a little bit more straightforward on having a little bit of a strategy of what they want to, how they're going to accomplish their financial goals, but they're in a very tough situation with oil prices going up, subsidizing gasoline, having to save an oil company that it's draining resources left and right. They could have said something about energy policy changing or something like that. Anyway, they tried just to put a happy face on the situation, but I don't think Mexico will be downgraded by Moody's anytime soon. Fitch could be, and Standard & Poor's, if it does later on in 6 or 12 months, it will still be investment grade. So we're, as an economy, Mexico is still there maintaining its investment grade status, but it's looking less and less solid as time passes by.
Así es. So let's move to the Royal Caribbean news. I think most people would have seen that the government effectively blocked their planned $1 billion plus investment in a water park in Mahuahual, Quintana Roo. Alicia Bárcena, the environmental minister, said it's not going to be approved. I think this water park was going to be pretty, from a perspective of people on a cruise coming to Mexico, was going to be a pretty impressive project. It was going to be 200 acres, a private cruise destination. Apparently, it was meant to be open next year, more than $1 billion. They had spent $220 million acquiring a port there, the Costa Maya port. It's going to have 30 water slides, the tallest water slide tower in the Americas, a giant lazy river, 6 pools, 3 beaches, 12 restaurants, 24 bars. And it was going to have capacity for 15 to 20,000 cruise passengers per day. Now, even though Mahual itself, as it currently stands, only has about 2,500 residents, so it was basically going to become a kind of extension of the cruise for the passengers. Now, it's embarrassing, I think, for the government to turn this down when the president herself, back in October of 2024, just as she took office, hosted the CEO of or top executives of the Royal Caribbean in Palacio, talked very positively about the investment, how it was going to attract further tourism in the Yucatan region, and it was going to be a sort of a development pole in the southeast of Mexico. So it was part of Ebrard's $20 billion package of investments that were meant to be happening, and now it's suddenly being cancelled. I mean, what happened between then and now? There was a big backlash on social media from environmental organizations, from the broader public, a kind of fear that these passenger cruise projects don't really benefit that much the local community, because basically the people from the cruise go to these projects, they spend the day there, they spend their money there, and then they go back to the cruise, but there isn't much spillover effect into the overall local economy. So, and then on the environmental side, obviously there was concerns about, reef degradation, mangrove destruction, water stress, biodiversity impact, and all of that meant that they effectively pulled the plug. Royal Caribbean stock even briefly fell on the news earlier in the week, and then they put out a sort of fairly constructive sort of press release saying they hear what the government is saying. They look forward to working with Mexico for an alternative project. So I think, leaving aside the merits of whether it should or shouldn't be cancelled, and I certainly sympathize with the environmental concerns about a project of that nature, I think what's disappointing from Mexico's perspective is to sort of open your arms without thinking it through first, without thinking it through the environmental implications, and embracing it so publicly, and then having to and then deciding to pull back. It certainly doesn't send a vote of confidence to other people thinking of investing in Mexico, because Royal Caribbean seems to have spent already a few $100 million on this, so they probably may not get that money back, depending on what they end up doing in Mexico. So it sends a sort of message that Mexico is not a predictable place to invest in.
Yeah, correct. I mean, I think the signaling is terrible in that sense. Once you get the president praising your project, economy ministry highlighting it, and then all of a sudden it doesn't happen. I can't avoid bringing the fact that in that part of Mexico, the Tren Maya brought a lot of destruction to the environment, and obviously environmentalist group protested. So, but it went ahead. And so we have here a little bit of double standards, I believe. I mean, I don't know the merits, the ecological damage. I've been to Mahahual. It's already a bit developed. I mean, it's a small town, but there are a lot of hotels and things like that. I wonder if the impact study was already done and had measures to counteract what it might have done to the area. I want everything to be preserved, but I also understand that business need to go ahead and do what they do. And if you had a good sign and you got excited because you got the president saying, yeah, great project, and then all of a sudden, whoops, it doesn't go along because environmental groups raise the volume, and there is no real discussion about what the repercussions might be or not. It's like you said, it's a bad sign for the investment community that wants to come to Mexico by not getting a clear message from the authorities of what is allowed and what is not allowed. So, and Mexico needs investment, but I think Eduardo was trying to do that. He must not be very happy right now. But again, it seems like it's another black eye for Mexico, like a little bit the Constellation brands up in Mexicali as well, where they had to move after investing a lot of money for water concerns. Valid. All the protests are valid, but I would have liked the government to have a much more straightforward decision-making process of why they canceled it. So we'll have to wait and see.
Yeah, I get a sense that there might be some infighting within the Sheinbaum cabinet. Alicia Bárcena has wanted to be sort of General of the United Nations and wants to have very high profile. She had a huge smile on her face in her press conference when she announced the effective cancellation of the project. So, she was able to put the environmental, flag around her. There were cheers when she made the announcement. It was very popular in that audience and maybe with many audiences. Eduardo, of course, who had championed this, at least so it seems, is more on the kind of pro-growth, get investment into Mexico school, and Barcelona on this occasion at least won the argument. Now, on the other hand, there was some good news on General Motors. We'll have more on this next week, but they announced back in January a $1 billion investment program in Mexico. They unveiled kind of details of it this week. They're moving production of the Chevrolet Aveo and Groove from China to Mexico. Domestic assembly will begin next year. There's 80,000 vehicles per year planned by 2030. Sheinbaum went to Toluca, as did Ebrard, with the top brass from General Motors. So that's absolutely kind of pitch perfect sort of USMCA sort of story. North America becoming more competitive, moving production from China to the region, and Sheinbaum even talked about owning an Aveo and using it when she was a university professor. It's one of the sort of top 2 or 3 cars sold in Mexico. And it's interesting because GM actually, most of its vehicles that they sell in Mexico have in fact come from China. So when people think about Chinese cars in Mexico, they think about Chinese brands like BYD and so on. But actually, a significant proportion of Chinese-made cars are under GM, and I think about 60% of GM cars in Mexico last year were made in China. So this is a move away from that, from GM's strategy of using China as its hub. But we'll hear more about that next week in our interview.
I would just add, Damian, that maybe the decision by GM was helped by Mexico raising the 50% tariff on Chinese-made vehicles. So even though they came under the brand of GM, like you said, they were made in China by a partnership that GM had with the Chinese automaker SAIC Motor. So this might be a sign that the tariffs are working in the sense of forcing companies to use more locally produced goods or not importing as many Chinese parts or components as they did before. Now, obviously, probably there is a competitive element because as we have seen in Mexico, how fast the Chinese brands are growing, like you said, BYD, Geely, and Chery. With the tariffs, they might not be as competitive as they were before versus Chinese-made vehicles that are moving to Mexico under GM brand. So I think it's a very interesting story in the sense that it brings back to the region some manufacturing. Maybe the U.S. tariffs, Mexico's tariffs are working in the sense of making North America a bit of a fortress, a bit of a regional powerhouse, which it is, but that it will trade among itself much more than before. So it's I think a positive news in that sense for the nearshoring story.
Agreed. So moving on to tomorrow, Friday, May the 22nd, Mexico and the EU are going to sign a kind of modernized global trade investment agreement. Ursula von der Leyen, the president of the European Commission, is here, as is Antonio Costa from the European Council. It's the first kind of big summit between Mexico and the EU for more than a decade. I think Antonio Costa is addressing the Mexican Senate. First time an EU kind of institutional leader has done something like that. It's a big event when it comes to EU-Mexico relations, probably the biggest event we've seen for a decade, as I mentioned. I think there's different kind of points behind this. First of all, it's taken forever. I remember people talking about this, 5 years ago. So it's been, and in the meantime, the EU has signed something similar with Chile. So it's been slow. But I think Mexico could have waited for the USMCA review to be finalized before moving ahead on the EU, and they decided evidently not to. And I think the idea is to do as much as you can, which is very little in the case of Mexico, to diversify away from the US, and something like this helps in that, because basically once and if this is fully approved, because it's still got to be approved by all the member states of the EU, it's going to remove pretty much all the tariffs between Mexico and the US. It's going to liberalize services. It's going to help customs. It's going to establish fairer rules on procurement access for the public sector. And importantly, it's going to give additional investment protection and update the rules governing arbitration if there's investment disputes. So all of that, is going to be great for Mexican products, avocados or tequila or beer or coffee, heading to Europe. And it's going to be good for European companies exporting to Mexico and for those investing, because even though the EU isn't a huge trade partner for Mexico, I think it's 7% or so of total trade. It's a very significant investor in Mexico, because the EU uses Mexico in part to export to the US. So you have huge companies like Volkswagen, with big, businesses in Mexico, and the big pharmaceutical companies that trade, that use Mexico as their America's hub, or their North America's hub, or one of their hubs. So having greater investment protection is a good thing. And then I think for Europe, they're also very keen to, and for them it's a little bit easier. They're much less dependent on the US than Mexico is. Diversify away from the US, given how unpredictable the US has been under Trump. They also like Mexico because Mexico has more or less free trade with the US. They can use it as an export hub to the US with much lower Mexican labor costs than putting similar plants in the US would entail. And then they're getting investment protections and certain kind of regulatory harmonization, labor standards harmonization or greater homogenization than was previously the case. So all of that, is good for Europe. So I think it's politically quite important. I think economically it can help on investment, especially with the concerns about the security of investment in Mexico. And I think that both sides can say they're doing, what they can do to diversify a bit away from the US.
No, definitely. I think it's good news. It keeps Mexico on the track of free trade in the sense of opening up its markets to other regions. Hopefully, it will bring more investment, like you said, as it consolidates Mexico's position as a key partner with other regions, and also for other regions to use Mexico to get into the U.S. Complying with all the regulations. I've heard that it's a really modern agreement, Damian, in the sense that it has all the most advanced regulatory framework for dispute settlements, for anything that might create a conflict between the two, when in the case Mexico and the European Union. So I think it's a welcome addition. It took a long time. We had a free trade agreement with the European Union, but now this is the state of the art in terms of agreements, apparently. So kudos for Eduardo to finally bring this to the finishing line, and there will be some celebration tomorrow between authorities of both Mexico and the European Union.
That's right. And trade with Europe is small as a percentage of Mexico's total trade, but it's not small in absolute terms. So Mexico trades $90 billion in goods and 30 billion €90 billion in goods and 30 billion in services. So it's just because we trade so much with the US, which is 900 billion or so, that it looks small. But it's relative to GDP, it's not immaterial. So, and as I mentioned, investment. I think cumulative EU investment in Mexico is over 200 billion euros. So it's a lot of money, and Spain and Germany have been big investors in Mexico over the decades, and they'll be cheering.
Mexico has also invested in Europe. I mean, Mexican companies have presence in Europe. We know Slim owns construction companies in Spain. Alsea operates in many European nations. So the agreement gives them a consolidated treaty for those investments to have a better framework to operate in case of any dispute. So, and hopefully, we've all said, we all wish that Mexico would be less dependent on the U.S. and open markets everywhere else. But hopefully this can, and with the help of Trump, if I may say so, increase the trade between the two parts of the world as they feel more compatible now that they have a framework to work with, and in the States seems always to be antagonistic to making deals. So good. This is what Carney said at Davos, that middle powers need to get together and work together. Well, I don't know if Mexico's a middle power. European is not a middle power. They're very powerful region, but it's good that they are trying to sustain a free trade environment for the benefit of their economies and maybe of their people. So I think it's great news that it's happening finally.
And the Mercosur, driven by Brazil, obviously, and has had real challenges getting its free trade agreement with Europe approved by the 27 EU member states, mainly because of agriculture, because Brazil is obviously a powerhouse in that. And I don't think that's going to be an issue here. I think Mexico's agriculture exports basically go to the US. So I think it's going to be much less politically sensitive. So I would expect, based on what I've read in European newspapers and elsewhere, that we'll get the European Parliament approval and the ratification by the member states. And I think that obviously the Mexican Senate approval is a foregone conclusion.
Correct.
Should we move to quick takes to finish off before we head to the interview? So, end of last week, we got a new CEO of Pemex, Juan Carlos Carpio Fragoso, replacing Victor Rodriguez. Juan Carlos was the CFO. I think this is kind of acknowledgement that Pemex needs to be subject to greater financial discipline. And I think it also gives even further powers to the energy minister, Luis Elena Gonzalez, who used to be Juan Carlos Carpio's boss, Mexico City Finance Ministry, gives her kind of greater control over Pemex.
Correct. On my side, I don't know if you saw, Damian, but a bit of the sign of Mexico's energy problems or its insufficient generating capacity happened last Monday when the government announced that it had hired a floating power plant to supply electricity to the Yucatan Peninsula. The CENACE, or Centro Nacional de Control de Energía, the state-owned energy agency that operates the country's electric grid, gave a contract to the Turkish company Carpo Powership. It's a 3-year deal that connects that floating plant to Mexico's electric grid at a substation in the municipality of Solidaridad in Quintana Roo. And the floating plant is expected to generate 250 megawatts and will operate mainly from May to October over the next 3 years, which are the hottest months in that region, that part of Mexico, when ACs rise the electricity demand, and sometimes it has triggered blackouts in the past. So the government is trying to avoid those by bringing in this floating energy power plant.
Some good news on fintech space, which we've followed pretty closely here. New Bank's Mexico business reported its first quarter results, and New Mexico, for the first time on a quarterly basis, was break even and and got to 15 million customers. So they have turned the corner, having reported like losses for the last 3-4 years, and are now break even, making a small profit. And then Klar, another fintech, for now very focused on credit cards, with their announced the purchase of Bineo from Banorte, which will give them a banking license. They acquired a mortgage fintech called Yave, which is going to give them another product for their clients, and basically like all of the fintechs, Klar is going after principality, and the more products you have, the more likely you're going to be able to get your customers to treat your bank as their principal main bank.
And on the coffee shop front, Alsea, like I said a few minutes ago, the restaurant coffee stores operator said that it was able to renew its licensing agreement with Starbucks International. So it will continue representing the company until 2046 in several markets where he has been doing it for the past years. As we know, Mexico, but also France, Spain, Argentina, Colombia, among other nations. In total, Alsea operates about 4,800 outlets, or a bit more than 10% of the total number of Starbucks in the world, which are about 41,000. So the company is hoping to reach $2 billion in revenues this year. This agreement consolidates its position in the coffee store industry in the countries that it operates.
So the last one from me, Vesta, at the end of last week, raised about $240 million in a follow-on offering. And Vesta is, as you know, in the industrial real estate market. And that's been a market or in a sector that's attracted a lot of institutional equity money as people see nearshoring continuing, and especially nearshoring out of industrial parks where Vesta is pretty strong. So a vote of confidence in the north of Mexico, especially in industrial parks. And Vesta is clearly one of the leaders. And that happens as we continue to see the takeover fight for Fibra and Macquarie, which is also in industrial real estate, heating up. It's probably going to come to a close this month. I saw that this morning that Fibra Next, Fibra Uno's industrial Fibra arm, just upped its offer again. So you have this three-way battle between Fibra and Monterrey, Fibra Next, and obviously Prologis that kicked it off for the Fibra and Macquarie assets. So more consolidation, and each has been raising their offer to try and grab this this trophy asset of Macquarie.
Finally, from me, for those that like to travel to South America or Mexico, announced plans to resume flights to Caracas, no other. This is expected to happen in the next few months. Aeromexico used to fly to Caracas, but it stopped doing it nearly a decade ago. So the airline's return to Venezuela obviously comes after the U.S. government invaded, or I don't know if it's an invasion, but extracted the country's president early this year. To face charges of aiding and abetting drug traffickers. So seems like Caracas and Venezuela, with the change of leader, although the regime is still the same, is open for business, and it's attracting not just companies, but also airlines taking some passengers to Venezuela in the next few months.
And remittances, just to finish off, Trump had a new executive order kind of cracking down on kind of non-official documents, non-standard IDs potentially used by non-documented migrants in the US. I think the Treasury Secretary has 60 days to come up with a sort of implementation of this executive order, but there are obviously concerns in Mexico that that's going to lead to a reduction in remittance flows, or as it becomes more costly or more difficult to send money back. I mean, I don't know how big it's going to be. It's obviously not helpful, but my guess is that everyone has access to a U.S. national that can help them send money back if that's what they want to do. But any kind of additional friction can lead to a negative impact.
Just I saw some figures by specialists that they say that the impact could be about 10% of all remittances that come to Mexico, but it's still a very speculative number.
Great. Well, let's head to our interviews. So it's great to have with us today Andries Smit. Andries is currently Chief Growth Business Officer at inDrive, an emerging markets focused mobility platform, which in Mexico City, as most of you will know, offers cab rides like Uber and Didi does. Andries, how are you today? Thank you for joining us.
Thank you for having me, Damian. I am fantastic. Thank you very much.
Great. Well, why don't we just start off with you telling us about inDrive in Mexico? How big are you? I don't know how you measure that. Drives, rides per day. What's your rough market share versus obviously your bigger rivals, Uber and Didi? And how important is Mexico to inDrive from a global emerging market perspective?
For sure. I always describe inDrive as the world's hidden gem in the mobility sector. Many times I speak to people, they don't necessarily know the brand, but then when I explain our size and scale, they are usually pleasantly surprised. To understand the context of Mexico, it is important just to, in a few seconds, explain globally our platform. We're in 48 countries, over 1,100 cities. For the last 3-4 years running, we've been the second most downloaded ride-hailing application in the world. We've been downloaded more than 400 million times, which is a great level of scale that we've achieved as a team. Mexico specifically is one of our key markets, definitely in our top 10, both strategically and from a focus perspective. We see a significant upside potential continuously in Mexico. It's just a very digital community, young population, still adopting the mobility industry, in our view, is still growing there quite significantly. We're in 50 cities in Mexico, so we've got a nice broad coverage of the market. Last year, we did well over 30 million customers that were active on our platform. So a significant size and scale already. We continue to see good growth in the market. And especially what I'm very focused on is how do we give our customers in Mexico more products and services? We already do, as you pointed out, taxi or ride-hailing services. We've got delivery services in Mexico. We launched some financial services. We give loans to our drivers, as an example. And then very, very recently, we've also launched advertising in Mexico. So really the tip of the iceberg, much more to do, but Mexico is very important to us.
So I did an internal poll of the people in my office this morning, asked them how many used inDrive. On the call, we were about 30 people, and about 3 people said they used inDrive. We're very happy with it. That's a 10% market share in the sense that everyone uses some ride-hailing app at some point. Would that be a fair representation of Mexico City, about 10%?
Of course, forgive me, I don't know the constitution of the group you requested of. One thing that we are very proud of is that we are the cost-conscious consumers champion. We really fight for the segment in our market who are really peculiar around knowing who their driver will be and having real control over what price they pay. These individuals might wait a little bit longer or might scroll a little bit more, but they want the certainty, they want the control, and of course they want a really good deal. So as far as we go, we really operate in that sort of affordability, cost-conscious segment. And that's really where we target. If you look at how the mobility segment grew over the last 10 years, of course, first it was around affluent customers, those that really just wanted convenience, that was less price sensitive, just clicked a button and wanted a vehicle to arrive. We see that segment is nearing maturity in many markets, including Mexico, but that's not really where we operate and compete in. We're really in and we don't therefore care as much about the whole market share. We really care about what are our customers saying in that cost-conscious segment.
Yeah, that's exactly what they said when I asked them why they used it. They fixed a price. In one case, it was 100 pesos. That's what he wanted to pay. And he would wait until a driver accepted it. In New York, there's a new app that's, according to my daughter, that's really taking off, which is called Empower, where 100% of the fee goes to the driver and the drivers pay a fixed fee to the app to drive Empower or Empower. What do you think of that model? Would you be open to sort of considering different models to the one you currently have, or are you very fixated on people putting their price and leaving it at that?
I'm not familiar with Empower, but one thing I am very proud of is in inDrive, we're very open-minded. We explore almost all new ideas, models. We're constantly looking at the horizon. Part of the new ventures arm is always to investigate what is new and what is happening. We have looked at the subscription model, and what is interesting is there are very specific markets where that model really has big appeal. One interesting anecdote is India, as an example, where that model is really, really thriving. In other markets, we've seen that not working as well. We particularly, the biggest benefit for our drivers is, again, this complete control. They know we charge a much lower commission than many other players in the market. For an example, we typically charge 10% commission in the markets which we are. And on a like-for-like comparison, that's significantly less than some other platforms. So one, they get that immediate price differential. Number two, in our application, the driver gets paid by the passenger immediately on completion of the trip. So they have cash in hand. And this is a huge benefit for them. Instead of waiting a week or 2 weeks before your money is paid to you. Many of our drivers really appreciate it. And then thirdly, as I mentioned, this ability to see which passengers want to go from where to where. As a driver, in some platforms, you don't have that. You don't have visibility of point B. You don't know in which direction you're going. Whereas if you understand the pickup and the drop-off point, you have the autonomy to decide in which direction in the city do you want to move. It's always very interesting when I speak to drivers. I always make a point of it when I'm in markets to take different trips with our drivers and also with other platforms just to learn. And this point is typically one of the most referenced points. The fact that they have that choice back is really important.
And if the passenger pays with a card, the debit or credit card, does the driver also get the money the same day?
It depends on the market and depends on the schemes. Most of our payments is done on a peer-to-peer basis. There is only really 2 markets, and it's not Mexico, where we facilitate card payments as a choice of that very specific market condition. In most of our markets, for most of our payments, it's either handled in cash or in a peer-to-peer method. So the driver still gets the cash immediately after the trip.
So how do you collect the money from the driver? Because Uber obviously deducts the money and so has no collectible issue. From their perspective, it's frictionless. From your perspective, how does that work?
Yeah, the drivers prepay us. So you have a small amount that you load up into your account that gives you access to the platform, and that allows you to take your various trips.
Understood. And how is the credit to the drivers going from a size of credit perspective? And would there be interest like Didi's doing of growing beyond drivers in your sort of fintech credit business?
We see financial services as a key part of the solution, especially for our drivers. Many of them are excluded from typical financial products. Whether you describe it as unbanked or underbanked, the reality is that sometimes they have to default to very predatory methods and players in markets for reasons which are sometimes, heartbreaking. I speak to drivers who had a family member go to hospital. They didn't have the money to pay for such bills, and they had to sell their vehicle, which is twice as bad, right? Now you've incurred this expense and you're losing your ways of income. So we see the loans continue. We really need to help that cohort. We've seen significant growth and progress in Mexico. What is heartwarming to me is that more than half of our drivers that took a loan with us in the last year have the ability to do so again. And that is really, really good. We see that uptake and the repayment rates much better than what we expected. In terms of additional services, we want to focus initially just on the driver side, make sure that there is flexibility in the supply. We are looking at other solutions, but again, in a cost-conscious consumer, We are really adamant that we only focus on the things that are critical and necessary for them to be able to drive us as they should.
And other financial services, apart from loans, debit cards, and so on, is that something that you're considering offering in the Mexican market and following the Didi route?
It follows on from the point I made around the payment methods and peer-to-peer wallets being a very important method in which our drivers facilitate. There is a general skepticism around cards and the costs related to cards. We are very focused on finding alternative mechanisms. So it's not necessarily debit and credit cards, which is of an interest to us. However, being able to have a wallet, being able to have pseudo same transactional services as you would have had in a card, that is very appealing in our market, and we're always looking for great solutions in that space.
And back to the question on the size of your credit portfolio, can you give us some indications on that?
The latest numbers I have is that there have been more than 70,000 drivers already in Mexico that have had a loan from us. And as I mentioned, nearly half of them have already applied for a second loan over the course of the last 2 years.
Both Uber and Didi talk a lot about electrifying the fleet that they work with. What's your take on going electric and then eventually going to driverless cars? Is that something you're interested in, or are you happy for Uber and Didi to take the lead on that?
As a person, I'm always very pro electrification. I think this is good for our planet, and we should all try and move at that pace. There are challenges in our markets, of course, and especially outside of the capital cities, infrastructure still is a challenge. Number two, costs of EVs remain prohibitive in this space. You do need quite a large capital investment to move into an EV space. I really hope, and we're looking a lot into the industry, some of the EV OEMs that are constantly trying to reduce costs and prices. I think this is very positive. I'm looking forward to seeing that come down dramatically still. I think this is a good move. This is probably a year or two still away before it becomes truly affordable. We are seeing the smaller vehicle types like scooters, electric bikes, and so forth, getting a bit more appeal. Not quite at scale yet, but there is more interest because of so in the couriers businesses, we're doing quite a few tests on that kind of thing. But we are not trying to force the industry, or at least our drivers, to move in this direction because of this affordability mechanism. Lastly, we do see as the EV cars become secondhand, so as we go through the first wave of new EVs, then you are seeing a significant reduction in those vehicle prices. I do think we'll see a lot of ride-hailing drivers over the next 5 to 10 years start buying up those second-hand vehicles at much lower rates. And I see that more as an effective way to electrify their fleets rather than trying to force new vehicles into it, unless there's a price breakthrough.
Last question, if I may. With respect to your other services, intercity rides, packages, how are they doing? Are they material in your total revenues, or are you basically dominated by urban ride-hailing?
If you asked me that question 3 years ago, then the obvious answer would be we're a ride-hailing platform. The last 3 years have been quite extraordinary at the pace of which we've been able to expand both the depth of each of the verticals, the additional products and services, but also the breadth, where we now offer 5, 6, 7 services in some of our markets. And this is a deliberate strategy for us. We want to expand. We see that our passengers and our drivers need more from us, want more from us, and why wouldn't we provide those services? Delivery started as an incidental where people would book a taxi, but then ask the driver to deliver a package. And then we went, wait a second, that's not really what they're there for. Let's create the delivery services for you. So it's increasing in scale and size. A very large proportion of our growth is in these new verticals. They're of course starting from small bases, but it will all add up. And in Mexico, the same story applies as what I've just sketched out as the global perspective. Our other verticals are proving quite popular. Our customers love it, and we see some good growth rates.
So if you were to put roughly in order the other verticals in terms of size, how would you order them?
Ride-hailing number 1, delivery number 2, financial services number 3, and then there's a tail of smaller initiative which has been launched more recently.
For example?
The ads business, which I mentioned. We're also piloting some marketplace initiatives. We're piloting some fleet initiatives. Quite a few different tests that we're doing.
Brilliant. Well, Andries, thank you so much for your time. Look forward to taking an inDrive on my way back home this afternoon. And I'll give you and your team feedback if there is any. All the best.
Thanks, Damian.
It's a pleasure to introduce Marimar Torreblanca, who's one of the top consultants of ESG in Mexico, to talk about this very important topic in the Mexican corporate world. How are you, Marimar?
Hi, Eduardo. It's a pleasure to be here, and thank you for the invitation. I'm fine, thank you.
Just to give a little background on your academic expertise, Marimar, like myself, studied at the ITAM, at the Instituto Tecnológico Autónomo de México, where he did a bachelor's degree in economics. And later, she completed a master's in applied mathematics at Columbia University. And she's been working in different financial institutions, and now she has specialized in everything related to ESG, or environmental, social, and governance as a consultant. So, Marimar, why don't we start by having our audience understand the history of how the impact companies have on the environment, on society, and on their own governors became so important? Where does it stand today? In other words, how did ESG became to existence, and how do we interpret where companies are regarding these parameters?
So I think to start with, I would say that in the early 2000s, the term was formally invented. So ESG came to existence around 2004, more or less. But of course, before then, many companies were already working on social issues and environmental topics separately. And then eventually this became like a consolidated movement. In Mexico in particular, I think the term of corporate social responsibility was very popular before ESG actually came into the market. And so companies understood that they had a responsibility to help the world and the environment and control their impact on the different stakeholders in a certain way, but they didn't quite fully understand ESG as ESG until, I would say, probably perhaps, I don't know, 10 to 15 years ago. The pioneers in Mexico usually were companies that had interests outside of Mexico, and so they knew that they had to work on these topics. And the Mexican locals were more focused on being socially responsible. So they thought about sustainability more in terms of perhaps volunteering or helping NGOs or like being a good citizen, not necessarily thinking about all the stakeholders and all the potential topics they could address, for these kind of issues. So more recently, the investors in Mexico, the Afores, started to care more about sustainability and started to ask more sustainability-related topics. And so in the past few years, we have seen a very significant evolution in the market with companies paying more attention to the topic and more companies doing things about it. And on top of that, more companies being transparent about what they do and actually linking everything they do to the term sustainability or ESG. So yeah, I think that's how we came to be where we are. And of course, now we are at a very interesting point in Mexico in particular, because the regulation now requires companies in Mexico starting this year to report on sustainability topics using the ISSB framework, which is pretty deep. So even companies that were not doing anything before or were not thinking about this as sustainability or ESG are now having to do so if they are issuing any kind of, equity bonds or whatever instrument.
So it's interesting. It's a combination from companies' own self-interest to the demand of investors that companies complied, to the regulatory framework now that the government has put in place. So it's become part of the whole corporate world if you want to be a public company. In that sense, how do companies are actually presenting these achievements in terms of environmental, social, and governance? You mentioned the accounting parameters that are now established. Is that the way that companies now address ESG mainly?
Yeah, so I would say there are several channels through which companies discuss their efforts. The formal ones are mainly the integrated reports, annual reports, where they can share very deep stories and examples and pictures and data and everything. And those reports are mostly in Mexico aligned with a framework that has been around for a long time that's called the Global Reporting Initiative. Around, I don't know, like 94, 95% of the sustainability or integrated annual reports in Mexico are aligned with that framework. And over time, the framework that has joined the parties, a framework called SASB, which tries to force companies or tries to make companies report things that are important for investors in particular. So GRI is more open. It's like for all kinds of stakeholders, all kinds of information. And SASB is very focused on impacts that are relevant to investors. So SASB tries to account for things like in quantitative terms and things that could affect valuation or could affect the outlook of revenues or margins or you name it. That's kind of one of the channels, or for the formal channels, that has been used for a long time. As I mentioned before, this year, the regulation that makes all public issuers report on their ISSB came into existence. And so now companies in Mexico are also reporting through XBRL, which is a platform where they report also their financial results. And that is kind of like a questionnaire that they have to answer, and they have to comply with certain topics and certain indicators and certain measures, etc. That's going to be a second channel where they can report sustainability efforts. Having said that, I think that the XBRL platform is not super friendly. So I think it's not probably going to be used a lot by humans, but of course in the world of AI, it's going to be used by AI, and it's public information and it's out there, but it's not very friendly formatting. So what we think will happen is that the relevant information that is put into that questionnaire will probably also flow into the integrated report in some sort of form. And this integrated report is much more marketable in the sense that it has, pictures, and it has like graphs and charts, and so it's much friendlier. Those are the two annual, let's say, avenues. But of course, companies also talk about sustainability in their meetings with investors, in their corporate presentations, in through their websites, their social media. Depending on the sector, it probably some channel or other becomes more relevant. But companies definitely discuss this when they have well-established strategies and they're mature enough. They definitely discuss this, all over.
But I mean, am I right to say that it's become much more metric oriented in a way?
For sure, that's the trend for the market participants. So for investors, what they have been trying to do for a while is have metrics that are comparable between companies, at least within a sector, because it's very difficult to measure how ESG successful is a company is, because a company that works on, let's say, technological issues will have certain impacts, and a company that's consumer oriented will have different impacts, and an energy company will have different impacts. And so comparing those three companies is very complex, because maybe one company is not working as much on, let's say, emissions, but it doesn't mean that it's wrong to do so. Sometimes it has to do with them not being as relevant in terms of emissions as other industries. And that company is probably working more on, let's say, labor issues. So because different companies have different exposures and different impacts on the world, it's really difficult to compare companies across industries. So what investors have been trying to do is to have metrics that are in a way comparable, so they can actually decide if a company is doing enough or not.
Correct, and that's where you come in to help them do that as well. Now, in the past few years, mainly with the arrival of Trump to the U.S. presidency, first in 2017 and again last year, those who believe that the ESG agenda went too far have, correct me if I'm wrong, apparently won some ground to try to reverse some of the advancements corporations had made in becoming more environmentally, socially, and governance conscious or friendly. Do you think I'm right in portraying the current situation in the world regarding ESG principles, or is it just more rhetoric than anything else, and companies are continue to comply because they have to, as you said, from a regulatory perspective?
Yeah, I think that's an interesting question, because it has several layers. So for sure, it is true that in the United States, the ESG agenda was hurt by the political environment in the past few years. And many companies that are still very committed to the sustainability efforts renamed or rebranded their agendas into sustainability or impact, or another word that was not so, let's say, politically sensitive. And then the companies that were not as committed, they saw the opportunity to scale down their efforts, and they did. What I think, that's in the United States. What I think is going on in other places in the world is that, in Europe, this continues to be a very strong issue. There's regulation for it. Even the regulation keeps growing, and companies that operate in Europe have to be very serious about what they report and how. In Mexico, of course, we have this new regulation, which is completely pro-sustainability, let's say. It forces companies that have not done anything to start doing something. And I think that investors in many places are still very interested in seeing companies worry about these issues. Having said that, I think the other layer is that, as you said, sometimes things in humanity, in all kinds of topics, go too far one side or the other. And in some cases, you could argue that some companies were destroying some value because they were doing so much about their sustainability agenda that they were kind of losing their core or not paying so much attention to their core business. And so they were sacrificing some returns because they wanted to be seen as the most advanced company in terms of whatever you want to say, climate or gender diversity or whatever. I definitely do not think that at the heart of sustainability, there is a necessity to sacrifice returns. I think that actually sustainability has to be another layer in your management systems, and it has to help you optimize in more dimensions. So as you mentioned before, I went to college here in Mexico and studied economics. And as you will know, economists optimize everything usually in 2 dimensions. And then I studied applied math. And in applied math, you actually optimize things in more dimensions. And so when people ask me, why did you study math after, being an economist and working at UBS for so long? Like, why math? How does that help your career? And I did it because I like to study. That's kind of the bottom line answer. But I actually think it did teach me something. It did teach me that you can think in more dimensions. So it's not only optimizing your margins or your growth or I don't know your valuation in 1 year's horizon. It's actually maximizing or optimizing in more dimensions, which is what is worth it. So when we talk to companies and they ask us, should we scale down on our efforts or should we be doing less because in the United States this is so politically heavy, and I always say, if you are feeling like you're doing more than you can handle and then you're sacrificing things because of it, then probably, yes, you went too far. But if you do this correctly, you're not ever going to feel that. You're going to actually find things that are going to help your business and are going to help your risk management and are going to help you find new product lines. And, you think about things that you were not thinking about before. And that's how I think sustainability helps. And I don't think that should disappear or will disappear. But of course, if any company or investor is not doing this with that in mind, probably if they just do it to comply with a trend or whatever, then maybe yes, they're missing out on something. So I do think that sustainability has had ups and downs, and it has been super popular, and then it has become kind of like I don't want to talk so much about my sustainability efforts because investors are going to judge me. And I think we're probably eventually going to find a middle ground. But I definitely think in Mexico, Afores are super interested in sustainability. So all Mexican companies or all companies that issue any kind of instruments locally definitely have to have this top of mind. And because of the regulation, they even have to work on it in a more formal way. So I don't see sustainability going anywhere locally.
Yeah, it's quite interesting. Two things come up as you were talking is they are compatible. And in other words, ESG is not necessarily incompatible with profits or revenue growth. On the contrary, they might even help you become more efficient in your emissions or the way you use energy or whatever. And the other thing is, I love what you said about economists having a two-dimension framework and math giving you more. I remember so many times when the professor said, all things considered stable, then this would happen.
Ceteris paribus.
Ceteris paribus, exactly. And math gave you that broader dynamic dimension that it's not only a two-way framework. And so that's quite interesting. So you see progress from Mexican corporations listed on the Mexican market on ESG standards. Am I right to say that? And has that progress accelerated or slow in the past few years?
We've seen consistent progress over the past 5 years or so. Every year we analyze the entire market and see how many companies have done materiality analysis, how many companies are publishing annual reports. Those reports, we analyze how formal they are, so what kind of information they include, if they align with international frameworks, if they disclose KPIs for their material topics, if they have targets for those KPIs, if they're aligning with things like science-based targets or things like that. And we have seen consistent progress every year, definitely. It's not fast progress, so it's not like, every year 30 new companies set targets for all their material topic KPIs. But it's consistent progress. I think 2026 is going to be an important transition because for the companies that had not even bothered about this, and there's a bunch of those companies that are, super illiquid stocks. They run as privately held companies, even though they're listed. They are, very lay low kind of companies. Those companies, even though they're almost like private, they're going to have to report these things. So you can not pay attention to it if you're not being vocal about it, but it's very uncomfortable to like have to be vocal and say, we have nothing, we have not worked on anything, we're not doing anything, and see your competitors do things. So I think that it's likely that this progress will accelerate. And one of the things that we have tracked, which is still far from where we think would be ideal, is the public KPIs metric, which means that once you do a materiality analysis, which will tell you which topics you have to manage, because those are the topics that are more relevant to your organization and to your stakeholders, you should have KPIs to manage each one of those topics, because if you don't measure things, you don't improve them. So you have to have KPIs for all your material topics. And then you have to share those KPIs, because you can have KPIs internally, and then if you don't meet your targets, because no one knows, it's not a big deal, and maybe, you know, people are okay with it. Once you make them public, then you feel a bit more forced to work on those things. I think because the framework that the regulation chose is very oriented on quantifying things and how those things impact your balance sheet, how they impact your income statement, your cash flows, etc., companies are going to be forced into starting to quantify things publicly, and that will, I think, accelerate the integrated thinking. And by integrated thinking, I think this has to do with, you know, considering sustainability as something that is part of the business, not as, you know, a nice to have separate team that can, I don't know, publish press releases and that thing. No, it's something that really affects how you make investment decisions or how you are going to grow your business going forward.
On that sense, by what you're saying, and these private public companies are haven't paid attention, but now they will because of regulatory framework. Do you think standards of ESG become an extra burden for companies that, in fact, maybe opt out of listing their shares because of the cost associated with complying with these ESG standards? Or have they become, or they should become just part of your same accounting or information gathering processes?
In some cases, it's definitely a burden. And in particular for instruments like secades, for instance, which are almost like private equity-like and don't trade, and having to report on ISSB sometimes is not probably their best use of time, because, you know, they are talking about what are the potential impacts in the long term for this issue in your organization, and the secade is gonna, you know, be released in 1 year. And so they're answering many of these questions with the term for this instrument is 5 years, not long term, so this doesn't apply. And, you know, when you have a questionnaire where, I don't know, 50% of the questionnaire is answered with does not apply, I think that's probably a waste of time. But for, let's say, ongoing concerns, so for companies that are issuing bonds or equity and are ongoing concerns, or even for investors that are doing these reports at the GP level, and they are also thinking like ongoing concerns, I don't think it's a waste. I definitely think at first they feel that it's super expensive and how am I going to do this? But I think with most of the companies, if not all of the companies that we've worked with, they have taken from these processes valuable things. So they do realize that, I don't know, a company that was not aware that their assets are in places that in 10 years are probably going to be having issues with water scarcity, start to think about what they need to do to be prepared for that moment. Or, you know, companies that realize that they thought their clients cared more about quality, and now they realize it's more safety, and so they have to work more on safety issues than quality issues, and that becomes like a commercial strategy. I do think that, you know, over the long term, there's returns on your investments in sustainability. But because they're difficult to quantify and difficult to visualize in the beginning, it might scare some companies away. Yeah, for sure.
Yeah, it's very interesting. Sadly, I mean, we see it in some type of assets. If you're environmentally sound and proven, you could even get a lower interest rate if you do a green bond. So those are the sorts of benefits that you're talking about in material sense. The financial costs of your capital could be lower if you follow the practices. Now, can you tell us which sectors in Mexico have made the greatest progress in terms of ESG standards and which ones still need to work harder?
For sure. I think it's interesting in Mexico because some sectors are very small. Like there are many sectors that have a lot of issuers, and some sectors are, even though they're relevant to the country or to the economy, they have very few participants. And some of those participants are these companies that are kind of almost privately held, although they're listed. And so some sectors have very bad performance and have not improved at all. For instance, the commercial services supply sector. If you look at their stats, it's like they don't care about ESG at all. But I think it has to do with the way the sector is composed in the market and not necessarily what the industry does in the country. Transportation is one of the most mature sectors in Mexico. Fibras are also very mature. Food and beverage is also very mature. And metals and mining, interestingly, is also one of the mature sectors.
Wow.
And banks is also one of the most mature sectors. And I think if you do a double click on those, you kind of understand, why they're there, why they're amongst the most mature sectors. In some cases, it has to do with them being exposed to the end consumer, like food and bev or transportation, and trying to have this, message or the ability to say, we're doing this the right way and our products are healthy or our products are, pollute less or whatever. And so those sectors care about it, not only because of the market, but also because of their clients. In some cases, like Fibras, I think it has to do with the sector being of a more recent creation, and them also fighting against an issue that was structural at first that had to do with the way the corporate governance was structured in these trusts when they were created 15 years ago. And so they have worked really hard on having really good sustainability efforts because they're newish and because they also had to fight against this stigma of having very poor corporate governance, which in many cases was true. They did have some corporate governance issues in the structure. And, I think in each sector you can find reasons like that as to why they're either not improving because some of the companies are not publishing anything at all, or they're improving because they have drivers in different stakeholders, or, just because of who they are.
Right. I mean, one of the ones that you mentioned that has matured, mining, I guess, because they're very exposed to criticism by the public, no? So
very scrutinized, for sure.
So that scrutiny forces them to do much more to try to prove that they're not doing damage to the environment or to the society or whatever. Finally, do you think these company concerns about the environment, the social and the governance impacts have produced results that we can highlight, not just regarding Mexico, but overall on the planet, if I may say so? I mean, we are all worried about what planet we are living in and we are inheriting to our children. So,
yeah,
is this making any progress? Can you give us a ray of hope?
I do think that there are things that are going on that are very positive and inspiring and, are good news. I also think that we're far from where we should be if we want to take care of certain trends in the world, like, even the Sustainable Development Goals, which seem far from being reachable at this point in many senses. So every year, when the year ends, we try to find a list of 10 or 15 good news that we found throughout the year that give us hope, because we also see a lot of horrible things happening in the world every day, in the news and everywhere. And I do think that every year we have been able to find more than enough positive news in terms of sustainability. So I'm sure that there are many things going on that we don't even fully know and will surprise us and will be very positive for future generations. And I do work with many companies that inspire me every day because of all the things they do and all the things they are able to offer Mexico in particular. I do see some stories that are amazing, and they work with like agriculture tendencies, and they work with like social issues, and they work on, you name it, like all topics. I have found super inspiring examples in my client list. So I'm sure if in my client list you have so many examples, within my client list, then outside of my client list, you are probably going to find even more. So yes, I do think there's always hope. Maybe I'm just a hopeful person by nature, but I do think there's always hope. I do think that companies need to take this seriously, because for sure there are some things that are worrisome, and there are some environmental issues in Mexico in particular that if we don't solve, they will present very significant challenges in a few years. And if we don't start working on them soon, then when we start working on them, it will be like we're already running behind. So yeah, both sides of the story are true.
Any concrete examples?
Maybe not, just because I don't want to make anyone else jealous that I'm not mentioning their example. But I would invite everyone that's interested in finding these stories to read some of the leaders' annual reports. You can find our annual public equity development report in our website, and you will find a table there that shows the leaders and laggards for every sector. And you can go into the annual reports of all the leaders, and you will see a lot of inspiring stories there.
Well, on that note, Marimar, we could be speaking here a long time because it's a very interesting topic. It's something that needs to be addressed, as you said, and the government is doing it, and the corporations are doing it, and investors are doing it. So thank you very much for your time. We might have you on in a few years to see how the situation has evolved, and where are we standing in this very relevant topic.
Thank you, Eduardo. Thank you for the invitation.
Take care, Marimar.
Bye-bye.
Thank you for joining us this week for this episode of Mex Moves. Please share us, review us, comment on our program, and we will hope to see you next week.